I'm not looking backwards the decades I was working in the region in '86. I'm just reflecting the last 18 months. I think this is what you are interested in, giving a little bit of forecast or outlook in a very changed dynamic environment because of the level of cheap financing these days. We are not back to normal, not at all, because crisis somehow, some kind, came to stabilize within the market, but it's not back to normal at all, especially not in this region, which has much more growth than Western Europe. So I call it an environment of change, of dynamic. I have no slides. I'm building up my SESA on the success, I have to say, of the last 18 months. So I invested through Seabury Global Investors more than 1 billion in 3 countries. It's Poland, Czech Republic and Austria, because Austria for me, not only because I'm Austrian, is the most Central European country if you take it from the geographics. 3 pillars I'm talking about: these investors, asset classes, meaning product, and countries, a snapshot where the journey in my thoughts is going the next 12 months. Investors, because money talks. The environment is different because of the arms, how to invest. So Maritz from INREF, where Seabury, or former ING, was a founding member with the non-listed funds. So ING did some 16 funds, but due to the change of the environment, they have been either sold or winded down, and now they're running only low single-digit funds by numbers. It's a PAC, so Pan-European Core Funds, so a very brave fund for pension funds mainly, a retail fund and 2 others. And here you see the change, how to invest, because it was a Dutch-based vehicle, the funds of ING, as the pension fund money very early already was routed to the markets that way. These days, I'm with my platform, where I'm a member with some investors from former days, are facing different fund structures. And Richard already mentioned today the fund of Starwood, 600 million. We are very close talking to them, because the difference to the ING funds is that they're investing much earlier. It's more a development fund where they step in partially at the zoning, partially they are spending the money and willing to spend with a permit, with a construction permit, and partially to cash producing. So there is a price tag on all the 3 options they're offering. If they give you 100 million, you can feel free, as they're told, how to allocate the money within the investment strategy you have chosen. And the second one I'm involved these days is setting up a fund for a construction company and developer. Both of the companies are stock listed. And what their goal is that they get a better financing on the land banking. Because in former days, you have not got a zloty, of Swiss franc, euro. If you came to the bank and said, I have a land banking, I have no zoning, I have no permit, please give me the money. I think this would have been, they will have been asking for a huge portion of equity to underlie this business model. In these days, the concepts are more open. The investors are willing to step in much earlier, meaning even if it's a mix between land banking, building in production, and cash producing. Also again, 1/3, 1/3, 1/3. It's a 600 million fund, which is going on market mid of June. And then there's a 90 days period to step in as a general partner or limited partner. So why I'm mentioning that? So from the very brave ING vehicles, it's going now to a different route that big names like Starwoods of this world are willing to step in earlier for better yielding, for sure, but it's more a mix between cash producing and land banking, and there also the companies are shortening their balance sheet when they get out the land banking out of their balance. So saying that's the new indirect way via funds. The flavor of the day I experienced within the last 18 months is club deals or direct investment separate accounts. I had the honor to bring Korean money to Vienna, slightly 300 million, for a 15-year-old high-rise. It was mentioned in this conference, Koreans are well prepared. I can absolutely confirm. So those people flying in and the direct flight to Vienna have been very, very clear and focused on the themes where there had to be a discussion. They had knowledge, they had good advisors, and if you can overcome that proving lessons they're doing with you, then you are really partner for them for long term. At the beginning, we had only teleconferences, and whenever, and this was also a learning, whenever they came to a status where they have not been clear within their own range, they immediately switched to Korean language, not knowing that in our room was also a person talking Korean. So when they came to Vienna and we introduced the team, they learned that within our team there was also a person understanding Korean, and then you have seen how it was working in their minds, what they said in the earlier stages. So this was the positive upside. Korean money flowing into the rest of the region, I can confirm, because we are dealing on this or another opportunity within the market. It was also mentioned that it was more complex. Yes, indeed it is. I'm really very long in the industry, and I learned location, 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 and that's it, and then you're on the safe side. Yes, still the location is key, but as we learned yesterday, it's more about the demographics. It's about the local political changes, and I faced many of them. Also in the last 18 months, Poland was on the list. So beginning of 2016, I was preparing in CEE Global Investors a white paper, why it's not so dramatic, and it will be good for the next years, because the investors are very greedy to get information outside of what they learn out of the press. Especially if you're dealing with American investors, they're getting their information out of the Financial Times, which is more than okay. But if you only base your investment decision on that, you never would have invested in Hungary, because the press was full for months, for quarters, that Hungary is not stable because Mr. Orban introduced the Sunday closing, he introduced the retail tax, then he recalled the Sunday closing, and so on, and investors have been puzzled. Because if they're based only on the reports they're getting and the company, the Financial Times information, it's not easy really to judge it that it's rather safe to comparison to other markets. The demographics also was a big thing. I can also use the example of Vienna, one of the only cities with a double-digit growth by means of people coming to Vienna, either from the countryside or from abroad, as some of the headquarters are established there. Same counts for all the other countries. Also, we learned yesterday that 1 million of Ukrainian people are coming to the region in here. Also, Romanians are coming back to Romania, we learned. The intelligence which left the country the last 10 years is step by step returning, because they see the chances that they can earn proper salaries also in their home country. About legal and tax environments, also a big thing. I learned in Poland, in a specific case, that we had caused a tax issue because of 2 tax rulings from the vendor side and ours. So we are still fighting for decent money to get that back. And you can imagine It's not easy as a fund manager to explain to your investor we have a problem, because they really want to be safe, better safe than sorry, and they want not really to have discussions like this. We are talking about Poland a lot the last 2 days. It's also caused by big articles in the German press which says Poland is still on the top. Next year we learned it should be 5 billion in here. Last year it was close to 5 billion. So it's a stable business, but with the, and I repeat myself, with the changes within the political system, it's not getting easier. What is additional coming in Poland is the money from the REITs, which helps big time. And what I learned, and I was completely surprised, that up to now, 90%, 90, of money invested in Poland is foreign money. This will decrease by the influence of the REITs if this is properly managed, visible. I'm absolutely, from the investor's point of view, concerned about the pricing. I think the markets are getting too fast, too hot, and we will come to that if I'm coming to the separate presentation of the countries, how I see them going forward. Coming to the second pile or pillow, it's the asset classes, the product, and we learned from Yolanda yesterday, there will be a lot of changes, or already is a lot of changes, also in zoning, in means of where are the cables running through the city that you can really be well connected for your IT systems. I recently helped a big investor to establish his office in Vienna in a high-rise building, and just as a little hint of change, usually if you have been renting 3 floors, you have been asking for 15, 20 parkings. This investor said, I want to have 2, and I only take them if I get electricity on my spot, because I'm driving electric. So these things, also in little things are changing dramatically, also the use of your property. Up to that, nowadays in the investment committees, I was asked regularly, Martin, what happens to the building if the big tenant goes away? Is there a chance to convert the building? Converting into resi, in many of the cities we are invested, it was a bigger need for residential. And then we had to prove if this is possible by means of technical issues, architectural, and also by zoning. And now it flips completely to the different direction. We have in Vienna a new planning zoning clarity since 3 weeks, where the Chamber of Commerce was asking to make a plan where it's absolutely forbidden and restricted to convert into apartments, because they want really to reserve the commercial area for commercial use. For me, this was ridiculous, because in Vienna we have 15,000 apartments lacking to be produced, and at the same moment the Chamber of Commerce is restricting that you can change the use of your buildings. By means of using the different usage of your premises, also concepts in former days, and don't get it wrong, I'm not negative on the regos of the old days, but in the old days as a developer, as investor, regos was always, if we couldn't fill it, we have been happy to have them. In these days, with yesterday's input from Mindspace, and also there's a concept I'm happy about to have it in one of our buildings, Ruby Works. This is an arm from Ruby Hotels. We could really implement more modern and more flexible use, because the old institutional leases, as we have been always dealing with 5 years, 10 years length, this is completely over, because in these days, in our properties, we are not getting these terms on a regular basis. About the list in which asset classes our investors are investing are not carved in stone anymore. In old days it says, we are going to this and this asset class, forget about the other ones. And I have examples out of my own experience. We never bought within ING hotels. The first thing in Vienna within CEE, where we had the same strategy, was we have bought a hotel. In the brochure where I'm described what I'm doing these days, we're doing everything except residential. Some days ago we signed residential. So everything is flexible, it's dynamic, it's different, because as Moritz said yesterday, it's not about wine, red wine or white wine, it's up from champagne to ciders. So we have to be flexible to invest properly our money on a long-term basis. And with the new concept of short-term living, of co-working, co-living, senior housing, so it's completely open wide field as long as the rationale of the investment makes sense for everybody to be on the safe side. Coming to the third pillar before the lunch about the countries, I think Poland still stays on top, but the investors are monitoring very, very precisely where the train goes by means of political changes and also what that means on the long term. I like that the tri-city approach and Krakow, it's not only Warsaw anymore. And the one lady asked about failures. I'm very open to share with you. Also, we failed in old days and we did our learnings with an investment here in Mokotów because of the lack of infrastructure, meaning transport, public transport. And this lesson learned, I was really more open to focus on a secondary city, on best location, with all the boxes ticked, than doing this mistake like in Mokotów again. Czech Republic, small country. I was leading my business out of Prague for the last 11 years, and we bought the shopping center Letnany from Tesco, their flagship shopping center in the region, or at least in Czech Republic. But it's completely dried out. We have seen the Palladium I was willing to buy, but it was getting too quick and too sharp. And also they have local players like the PPF, the CPIs. So in Czech Republic, they're really advanced, like here in Poland with the Kuciks of this world, to bring in real institutional money already to platforms, because the funds which have been built up by my team have been sold to CPI, and we're talking in one ticket size some 700 million. So this is a ticket size which is really reasonable and big. Slovakia, top of my list, except Bratislava. We have been invested in Banská Bystrica, and the company is still with one of the investors. I'm sure you have never heard, or most of you have never heard about Banská Bystrica. This is very eastern in Slovakia. It's the best performing shopping I ever have done, with a waiting list of tenants. And if I have not seen the list, I won't believe myself. So there is still an opportunity within Slovakia, as it's in the Eurozone. It's also easy to be explained to the investors. Hungary is next, ranked very high. Even it's heated, I will call. It's not overheated yet. So Budapest and some other cities are on our radar, and hopefully today, as we speak, we have closing in Budapest in a secondary location where the investor buys cash flow. It's a back office of an international bank. So also the view of investors only best located for normal yields is widening up a little bit to plan B locations, 10 years lease, but yielding slightly below 10%. So you take the risk on that one and earn money for the next 10 years. Not because I'm Austrian and I'm not a monarchist, talking about Hungary and then Austria in one sentence. Austria is the cheaper Germany. It's a market with 3 billion. You can invest. Ticket sizes between 30 million up to 300. If it's getting more to the 200, 300s, the first question also from the Korean was, Martin, is this investment liquid? And lucky me, all the high rises in Vienna traded already 3 times, some of them 5 times. So yes, they are liquid because the investors coming from abroad, if it's Canadian or if it's Asian money, they want to come in, and we learned also in the conference, they want to get out in a reasonable timing. Romania, I like it, and the ambassador was very clear where the upside for Romania is. I'm not that positive in these days. I was with my team in Romania talking to the regulator. If you're bringing in really big money to the country, as we founded our office there in 2007, and we have been invested in Iași and secondary cities already. And they have been very clear. They have been very counting on the anti-corruption. And at the very beginning, it was really interesting to see that the anti-corruption process really had an effect, because they have not jailed only the little guys. They have also jailed, I think, the vice mayor of Bucharest and other politicians. So everybody thought now it's really getting clean there. But this kind of had an inflation, and it was kind of not really treated as they have started with cleaning up the environment. So leads me to the next one, Bulgaria. And Lila yesterday was very clear that it's on her list for her investments. I completely share. Serdica Center was sold recently. It's a big shopping center, 100 million ticket, yielding some 7, and also some office building are coming on the market with big ticket size and long vaults around the 8%, as I have learned the last days. So there is some dynamic. It's a different risk which is priced in, and every investor has to make the decision if he goes for 4% to Vienna or for 8% to Sofia. Last but not least, Ukraine and Russia. I assume there are not too many people here in the room who has money back to deliver it to Russia and Ukraine. If you have a money back, feel invited, because Immo Finance is trying to trade their platform and investments in Russia. The asking price at the beginning for the whole investments was 1.2 billion, and I think it's not 7 digits anymore. So this was a rough overview about how investors think about it, which routes they're taking to invest, different concepts. I think we have to be very open and wide to leave in this temporary living, student housings, even hotel usage in some cases. And last but not least, Central Europe is not only Poland. Poland is very important. Poland will always have a place, and new money via the REITs coming in. I think it's a good idea. But also the rest of the countries I mentioned, there is really a sense to do the investments. I think all of us, if we are once infected with the real estate virus, we will stay in this business. And as the lady said, the music plays loud. And even it's playing not that loud anymore, I think we will dance a slow fox. Thanks, Richard, for organizing. And if you have enjoyed the conference, I'm pretty sure we will see all of you again at the next CEE Summit in 2018. Thanks a lot.